So when it comes down to identifying and trading with the trend, it's about being able to come up with a simple rule you can consistently follow. I will show you some examples and ideas for such a rule, and at the end of the video I will show you my personal rule that has proven for me to be highly consistent on the 5-minute chart, with loads of data backing it up. The general idea of trading with the trend is that there are 3 phases: the impulse moves, consolidation moves, and the pullback, often marked by a liquidation followed up by a continuation. The 2 core components for successfully trading the trend are being able to identify the impulse, this is essentially your trend, and being able to identify the pullback that isn't too strong so that the trend could have actually reversed. Now, first of all, I will advise you to not overcomplicate this, as trading in itself is already hard enough. So the key is to come up with a very simple and systematic rule that you can always follow that will be consistent. Now, the first idea of a trend following rule can be that you look at the daily candles and try to catch a wick. Let's say that these 2 candles are the 2 previous daily candles. The main idea of trading is that you can come up with an edge that is based around the idea that most of the time the 3rd candle will also be bearish, and you are trying to catch the wick. For example, you could have a trade like that. Now, in order to catch the wick, you could trade the break of structure, of course. Let's say that the next candle opens and you are looking for this pattern, right? And this is essentially what happens during the wick. This is a strategy that you can come up with. And so your rule would be that the 2 previous daily candles have to be bearish in order to go for a short, and the 2 previous daily candles to be bullish in order to go for a long. Now, you do not have to be right all the time, of course. If you have a trading strategy with a 5-hour profit, for example, you will already be breaking even when you're right 20% of the time. And your job as a trader is to improve upon this idea and eventually have an edge that can make you money, right? Another idea of a rule would be, and now I understand that loads of SMC traders will be starting to throw things at me for saying this, but to use the most simple indicator there is out there, the moving average. Now hang on with me, because for most SMC traders it will already have a negative connotation, but if you understand what it stands for and if you know how to use it correctly, it can be a very powerful indicator that will get you right with the trend all the time. Because what is the idea of the moving average? Now, you need to do some research on what would work for the time frame you are trading on, but the 2 things that the moving average does best is identifying when the trend has shifted, like here and here, or what the trend currently is, like here the price is above the moving average, so it's going up. And the other thing is setting a limit for how far a pullback can be before it becomes too dangerous in a way that the trend could have shifted. Now, for example, in this particular case, and this would be about trading on the 5-minute, I would say, it seems that the simple moving average with a length of 300 would fit right, as the pullback right here wasn't too far and it was still valid to go long here. And if we go back to the first points, these 2 points are exactly what the 2 core components of successfully trading with the trend are. Now, I know for SMC traders this will be hard to accept that the moving average is actually a good indicator. I've been there myself. I wouldn't accept that a simple indicator like the moving average would work, that, you know. But as I've traded more and more and came to realize that you need a simple strategy with simple rules, I actually came up with a rule myself to consistently follow the trend. And an idea that I had was also actually using a moving average to identify the trend. Another way to trade with the trend is to actually go off of price action. If we zoom in here, it would be a valid trade to enter off of an area like this that broke structure. Now in this case, it is very important that you actually have a closing candles as your break of structure, otherwise it could be just a liquidation, or you could be in a consolidation as it goes sideways. So it's very important that you have strong closures as a break of structure, and then you could look to enter off of this supply or demand zone. So over here, another example. As you can see, we broke structure over here. We closed very high, so that's a very valid break of structure. And then we pulled back into this area roughly, where it consolidated and reversed and continued the trend.
So one thing I hate about SMC, and the reason I do so is because it gets in particular beginner traders, and mind you, I was just like this when I started. The idea of being able to constantly hit 10, 20, 50 R trades, trying to catch some 1 minute reversal for a continuation on like the 4-hour chart or something crazy like that. Now of course this is possible, but you're skipping so many steps. I would suggest first going for a 3R. Yeah, a 3R seems to be a very nice sweet spot. There you can analyze all different kinds of things and go from there, build a foundation for your trading system. And if you have mastered that, then you can go back to all of those trades you took and see, how many of those trades actually ran to 20R? And what were the conditions of that? Then you are in a spot to go look for those 10, 20, 50 R trades. But first, keep it simple, guys. Just like this trend following rule, keep it simple. Make sure you are actually following the trend and not trying to enter here on some 1 minute reversal on an order block on top of an order block, Yeah, just start with 3R targets and keep it simple.
Alright, so now I will show you my trend following rule, and it goes like this. I trade 5 minute reversal pullback to continue the trend, like this. And if done at the right spot, it could run to 20R, if you would like that. So I enter on the London session and the New York session. London is marked by this green box, London by this white box. And then I look at two things, and either one or two of those must be true. The first one is I look at the previous New York session, and I measure the high to the low, and I mark the midway point, the 50% Fibonacci essentially. And my rule is that my entry must be below that midway point in a short, and the midway point must be below the entry point in a long. And the second one is I look at the second previous day, and in my case the day starts at the London session and ends in the Asian session. This is not based off my time zone, but basically based off my trading, when my trading day starts. And then I measure the midway point of the second previous day. So this would be your current day, this would be your previous day, and this would be your second previous day. And then the same thing applies. The entry must be above the midway point of the second previous day when in a long, and the midway point must be above the entry point in a short. That way your pullback will never be too high because you have a limit, and you will have measured the trend. And now I will show you on the chart. This is actually, this fits in my strategy. So I measured the previous New York session, which is here. As you can see, this is invalid because the entry point is not above the midway point. But I also measure the second previous day, as I said, which started London, then New York and Asian. So this is the second previous day. And as you can see, the entry point is far above the midway point of the second previous day. And thus, for me, a long is valid. The pullback has been concluded by this break of structure, as you can see on the 5 minute right here. And then it ran very nicely. In this case, it could have run to 11R, Of course, I wouldn't advise to start targeting those targets, but I would go for 3R. And now you would think as maybe an SMC trader, yeah, but it has to break this high, right? Well, no, it can also, oftentimes it reverses at maybe this order block or anywhere else. It could reverse at any point. So I would start off just targeting 3R. That's what I do. And then the second, you could have a second TP at liquidating the actual high. And that's it. Very simple. Nothing overcomplicated. This way I will always be right about the trend, and you can too. Just keep it simple. Thank you for watching. Bye.